21st of April 2022. I just want to talk about bottom fishing. One stock I've actually got options on this one is Medtronic, and I forgot to mention it in the last video about the 30-day challenge. I bought it here. Yeah, a bit of a bottom fishing exercise. Looked like it was big volume, looked like it's going into stage 2. And look, to tell you the truth, it probably is. We're sort of showing that it is at the moment. Now, the question is, should I be bothering with this sort of stock, regardless whether I make money on it or not? When, yeah, it's trying to form a bottom. This sector is not particularly strong, although I just went through a few other stocks. They do look like they're sort of shaping up. Or do I just stick to simplicity and just stick to the stronger sectors? My next video is actually going to be on simplicity and really pulling my system together to make it simple to trade and just execute only, not think about things too much. So there's really good traders like Ryan Pierpont just keep saying just dumb it down to something you can understand, but don't sort of try and overthink the markets. You're not going to be able to do it anyway. Anyway, I digress. So yeah, now the problem with bottom fishing, of course, is you've got two problems. You've got a lot of overhead resistance here, so people who are buying here, it'd be hard to get out. So whereas if you're buying stocks that are nearer all-time highs, there's less sort of natural sellers. I've never actually researched to see if that theory holds true, but I think it does. So another good example is Vale. I didn't actually take this trade. Started watching it around here. Didn't buy it. Would have been a cracker of an options position, but again, yeah, trying to sort of bottom fish there a little bit. Now, the big sort of risk with bottom fishing is you'll end up doing, you can expose yourself to something like a Netflix. Now, admittedly, it was trying to form a stage 1 here. Never really had any indication it was going back into stage 2, so yeah, you shouldn't be buying it at all. So yeah, it's gone and dropped 35% today. So when is it okay to bottom fish, and when is it not okay? I think for me, by and large, I'll try and stick with the strong sectors, which means stocks that are already in an uptrend just having a pullback. So buy a stock in an uptrend in a strong sector, but the actual stock is having a temporary sort of vomit moment. The two cases where I would look to bottom fish is the blue chips that have been sold off and have a potential to mean revert. So, and that's not quite as crazy as it sounds. So go back to Medtronic. Huge company. The nice thing about this thing is I don't need a huge sort of move because the options are so cheap, and that's why I sort of lean more towards a blue chip. So I've got a scan that's got a sort of I'm looking for companies that have been sold off above a certain market cap, and I can just get exposure, very cheaply. So yeah, that was my sort of logic with Medtronic there. Same with Vale when I was looking at the options were super cheap. So yeah, sold off blue chips with cheap implied volatility, looking to mean revert. The other time I'm going to do it is after major sell-offs, and I'm looking for stocks that are priced for bankruptcy. Daniels is a shipper. this is just an amazing amazing chart. Everyone's been talking about, coming out of the pandemic, everyone's talking about Tesla, still are talking about it, the Pelotons, all those sort of big high-flying names. But yeah, look at this thing. This is just a boring shipping company. Got down to $3.40. Sort of gave you some loose signals to start buying here. That's $5. It's gone to 90. Then imagine buying some long-term options against that. The market cap got down here to about 100 mil. They own 37 vessels, so I'm not an expert in that area in the slightest, but it seems pretty cheap to me. So GameStop is another sort of famous one where it was sort of priced for bankruptcy. So my two best trades ever actually have been stocks that have been bought coming out of a major sell-off and buying a fraction of either price to sales or price to book, or just price to land in that particular case. So I think in those circumstances, it's okay to bottom fish. Now with a company like Daniels or these sort of bankruptcy ones, the charts aren't going to look as clean. They're a bit more erratic, but at least I want to see that the stock's in stage one and hinting at going into stage two. But definitely sort of going into stage two, I should say. But don't be so finicky on the actual entry, because it may not be a clean pullback to the 50-day moving average. You might have to take a general view that it's in stage two, things are in place to get the company back in order, and then buy the long-term, long-dated, out-of-the-money options to hopefully make the very serious money at that point. So yeah, 2 times a bottom fish, mean reverting blue chips with cheap implied volatility, or bankruptcy trades coming out of major sell-offs.